Welcome back, ladies and gentlemen. My name is Daily, and this video I'll be covering SynFutures, the latest project on the ByBit Launchpool. Yes, this will be our first ever video talking about a ByBit Launchpool project, but that's because ByBit has been going crazy with their Launchpool projects, okay? Like at some point, like they have 3 different projects at the same time in their Launchpool. Like the amount of projects being on the ByBit Launchpool is just crazy. So you don't want to miss out on ByBit this next season. Check out ByBit. The referral link is in the description. But going back to SynFutures, so this video I'll be talking about what SynFutures is, how they work, because they really do have a unique mechanism called the Oysters AMM that potentially can confuse a lot of people, right? And then next we'll talk about the ByBit Launchpool, how you can participate, and then as always the price prediction of F token, right? So it's gonna be fun. Let's get into it. So there it is, folks. This is the official F or the SynFutures token on the ByBit Launchpool. Okay, the staking starts in 3 days and 9 hours at the time of making this video. Okay, it's gonna be listed on ByBit as well, so very excited for that. Now we're gonna go back, you know, to the ByBit Launchpool in a little bit. Right now, I just want to talk about what SynFutures is in brief. So SynFutures is essentially a perpetual decentralized exchange, which is obviously nothing new. If you're in DeFi, you probably know what they are, but they do have a unique mechanism. Okay, so what that is imagine Uniswap, right? Uniswap v3 concentrated liquidity, but for perpdex. Okay, so Uniswap concentrated liquidity v3, they are basically for spot market, right? For swap, right? But SynFutures bring or take that model and apply that to the derivatives market. All right, and by doing that, they have some really interesting mechanism. So for example, if you go to their website, right, if you click on markets, you can choose a random like trading pair. I'm going to choose Bitcoin / USDC, right? And I can basically select a specific price range of Bitcoin to provide liquidity. So for example, in this case, I'm going to select the range of 75,000 to 121,000. So what that means is if the Bitcoin price is trading within my range, right now is at $95,000, which is within my range, which is good, right? I will earn an estimated APY of about 165%. That's it. That is the Uniswap v3 model, right? Very easy to understand. Now, if I were to, let's say, shorten the price range of between 84,000 to 109,000, obviously I will earn more yields, more APY, because right now I'm targeting very like short in terms of like the price range, right? But there's also a risk, right? The shorter the price range, the more likely that my liquidity will be out of range, and in this case with SynFutures, liquidated. Now I'm going to explain that in a little bit, like how am I going to be liquidated if I only provide liquidity, right? I'm going to explain that in a little bit, but that's how it works. Okay, basically a Uniswap v3 model, but for perpetuals like DEX. The users can then also trade futures on those pairs with up to like 33x leverage, because at the core, SynFutures is a perpdex. So obviously we can still trade futures on it, right? But that's just the liquidity side. So if you want to trade futures, there are different pairs like Bitcoin, Ethereum. Bitcoin, it actually has like 33x. Ethereum has like 33x. That's probably the maximum amount of leverage that you can find on SynFutures. Now, if you personally want to, let's say, list a trading pair on SynFutures for other people to trade and earn yields on top of that, you have to apply for their launchpad. All right, just click on launchpad and then click on the grant here. Click on this link and you submit basically all of the information or details that they require, and if they decide that it's good enough, then your pair will be on their platform in no time. Basically, that's what SynFutures is. They have 3 main features. The first one is perpdex, where you can trade long and short. The second one is you can provide liquidity in the Uniswap v3 style, which they call it the Oyster AMM, which is very different compared to any other perpdexes that I've seen. I don't think there is any other perpdexes that is doing the same thing, right? And lastly, they allow anybody to just create a token pair, apply for a launchpad, and let it be traded on their platform. A little bit about their current statistics. So the TVL of SynFutures is at about $52 million, but surprisingly their volume is crazy. They have like $200 billion in trading volume, right? In cumulative trading volume. That is, I would say, top 2, top 3, right? You can clearly see that right here you click on volume, and if you click on perps, right, on DeFi Llama, and if you click on the volume, cumulative volume, right, you can see that SynFutures actually top 4, right, $232 billion below Apollo, Hyperliquid, and DYDX, and even more than GMX. In terms of the fees accumulated, SynFutures has about, I believe, $50 million, yeah, about $54 million in terms of trading fee. Now, compared to GMX, I believe this number is about around $100 million in cumulative fees. So yeah, revenue is about 110 million. The fees, however, like 350 million. So that still shows, even though the trading volume on SynFutures is a lot higher. Well, just like not a lot higher than GMX, but like the same amount, about 230 billion. But the fees on GMX is much higher, about 350, compared to SynFutures, only 50 million. So that shows that the fees on SynFutures is very, very low, right? Very, very low, about 7 times lower. So if you want to trade futures anywhere, SynFutures is probably the way to go. Alright, that is some of the brief information about SynFutures. Now let's dive into how they work in detail. Again, SynFutures has 3 main products or features, okay? The first one is the perp desk. So the way that you access the perp desk, very simple. Just click on the website of SynFutures, alright? Click on the market, and you can see that there are a ton of trading pairs available. Now, again, they are available on Blast or Base. For the Oyster AMM, the V3 version, right? It's on Blast or Base, so you have to choose, right? Let's say I'm on Base, right? And I want to trade Bitcoin and /USDC. So this is how I do it. Just click on the pair, right? And immediately you can see a very nice trading panel here. You have the limit order, the market order, and also the scaled limit orders. Now, what is the scaled limit? Basically, it allows you to, get into multiple orders at one transaction, okay, and different price ranges. So for example, if I want SynFutures to buy or to fill in 5 orders, right, I can choose 5 order counts, and I can select the price range, which is in the gap right here, 0.6%. So that means that SynFutures is going to short like 5 times my position between the price of $96,000 to $98,000, and then I can specify the size distribution, like how I want my orders to be executed and all that. And I can choose a leverage, right? But I don't really recommend this feature, because to a lot of people this might be a little bit confusing. But yeah, to the pro trader, definitely check it out. For you, if you are a new trader, I would say check out the market and the limit order, okay? It's very similar to a CX, like a centralized exchange experience, right? So let's take an example, the market order, okay? So how you're gonna do it is, let's say if I want to long Bitcoin, $95,000 right now, I can choose the size in either Bitcoin or USDC. Obviously, I'm gonna do it in USDC. So let's say I want my size to be like $1,000, okay? If I want my size to be $1,000, and let's say my leverage is 20x, I want my leverage to be 20x. So and if you look at down here, then it shows you the amount of margin required, which is $51. That means I need to have $51 at least minimum, right? $51.3 in my wallet for this to work, okay? And then they also show you the estimated trade value, the trading fee, okay? And here's an important part. I would say that SynFutures is probably the cheapest platform that you can see or find out of all the perp dexes. Not only on Blast, not only on Base, probably the cheapest out of all. GMX, the trading fee, is like 0.07%, okay? On SynFutures, the trading fee is only 0.02%. on Bitcoin pairs and on Ethereum pairs, because they have a program, right? They have an incentive program to lower the fees for a certain period of time. I don't know when it's gonna end, right? But for now, they are the cheapest, 0.02%. That is crazy cheap, right? I found another exchange, a perp dex, that has like 0.05%, but that's the lowest that I can find. SynFutures, 0.02%. Crazy, all right? And that is for the taker fees, okay? For the maker fee, SynFutures actually gives you back like a percentage of the fees, right? So you don't actually like need to pay a fee on SynFutures for the limit orders. You can actually earn 0.01%. That's in their documents. So look at this, right? If you click on limit, and if I put in the exact amount, like $1,000, 20x, right? The fee rebate, all right? When your limit order is filled, you can receive a corresponding fee rebate. So when you open a limit order, you actually earn money from the fee rebates. That's kind of crazy, right? However, there's also something you need to know is that they have an execution fee of $0.02. That's fixed, 0.02 USDC. So for example, if you open a limit order, you get a percentage of the fee, right? But you also lose $0.02 if your order is filled, right? The same with the market order. So you would lose $0.02 if your order is filled, and that is on top of the of the taker fee or the maker fee, depends, right? And if you close your position, you also have to pay $0.02. Okay, so that's like both ways. But I guess that's the same with any other perp dexes, so that's not like an issue. My point is, SynFutures is the cheapest perp dex that you can find. The second feature of SynFutures, and this is going to be a little bit more complicated, is the liquidity side of it, right? So as we established, they have the fee 3, which is the Oyster AMM, allowing you to provide liquidity in a specific price range. You can choose. You can actually lose your money, lose your liquidity if you are not careful. Now, here's a question. Why would you lose liquidity? Like you just providing liquidity, you put your money into a pool, right? You're not supposed to be losing it, in any cases. Like that's very strange to me. Yes, you can actually lose it. So here's how it works, right? When you select let's say a liquidity range, right, between $83,000 or $84,000 to $109,000, and you add liquidity. Let's say I add like $1,000, even though I don't have $1,000, right? Let's say if I want to add $1,000, if the Bitcoin price is trading outside of my range, let's say like $120,000, I'm gonna be liquidated. Yeah, my $1,000 when I put in the liquidity will be liquidated, and I will lose my money. Okay, so in this tutorial video, right, you can see that this guy is providing liquidity in the Ethereum pair. At the moment, the Ethereum price is $1,700, and he's providing about $5,000. Okay, so fast forward to the video. Okay, here we go. So he has provided liquidity, and he selected the range between $700 to about $3,800 on Ethereum. So as long as Ethereum is trading like between this range, then he's good, right? He's earning juicy APY of about, let's say, 1,000%. Insane, right? But there is a liquidation price. Okay, and if the Ethereum price goes to this liquidation price of $4,069, then he will be liquidated. His $5,000 will be gone. Here we go. They stated this very clearly in their documents, right? So the question is, why wasn't the fund returned to my account after my liquidity was removed due to going out of range? So when the liquidity that you provide goes beyond the price range that you set, it is automatically converted into a net position. In the event that the liquidation price is reached, your position will be liquidated. And in such cases, it is important to note that you will not receive the margin back in your account. So all of these, okay, in summary, it means that when you provide liquidity in SynFutures, you have to pay attention to the price of the asset. Okay, you can't just select like very short like price. For example, like you can't just select very short price like $92,000 to $98,000 of Bitcoin. What if tomorrow Bitcoin price were to have a massive pump to $99,000? Well, then you will be liquidated, right? Because it's outside of your $98,000 range, right? So it's very dangerous if you try and select like very thin price range. As soon as it approaches your liquidation price, you have to remove it immediately. Okay, remove it immediately and get out, or your entire liquidity will be liquidated. Finally, it's the third feature, right, where it's called the Launchpad. So basically what it means is, again, anyone can create any token pairs, submit it to their grant, program, and the SynFutures team will have a look, if they like, and if you provide all the details correctly, they will like put your pairs on the live page like this, and other people can just basically send or deposit their tokens in here, and if there is enough token, I believe, then the pair will go live, and you can earn a percentage of the trading fees from this pair. But yeah, moving on to the next part, which is the tokenomics. SynFutures just recently announced their F token, Tokenomics, and how they're going to be using that token. Okay, so very nice. First of all, the basics. The name is SynFutures. The ticker is F. I don't know why it's F. I like it. It's going to be on Ethereum. This is the contract. The utilities, like there are various utilities. The first one is the voting power and skin in the game. So what it means is the F holders can stake the token and gain voting powers on various proposals, such as new features, risk parameters, adjustments, and other strategic initiatives. The second utility is the boost for the airdrop. So if you have F token, whether from the airdrop, the initial airdrop, or if you buy it from an exchange, you can also stake the token to boost your incentives and accrual rate for future airdrops, like season 2, for example, right? Which they will announce in the future. The third utility is the fee discounts and rewards. The holders of F will be eligible for a fee discount and potential future rewards based on the amount and duration of their staked token. Okay, so like immediately, SynFutures is already like a very cheap project. If we get more fee discounts, like I can imagine like how cheaper it can be, and basically like trading on SynFutures is probably one of the best places to save on the fees, all right, and here's the tokenomics. Okay, the F token has a total supply of 10 billion tokens. The community will have 28.5% of it. The foundation treasury is 25%. The backers and investors, though, they have 23.5%, which is a lot higher than I would want it to be. Other projects, for the backers and advisors, they have like 10-15%. But SynFutures is like 23.5%, a lot. The core contributors, 15%. The protocol development, 5%. And the liquidity is 3%. Now, I have problems with this tokenomics, okay? It's not like I don't like it, okay? It's final. It is what it is, right? I just have issues with the way that like they use their wording, all right? And this happens with a lot of projects too that I've been looking at. It's not only SynFutures. I don't know why they do this. So here we go. First of all is the community, right? 28.5%. When people look at this number, they'd be like, oh, it must be for the airdrop then. It must be for us. Not entirely. Not entirely. So within this community of 28.5%, only 7.5% is for the airdrop. Okay, which is standard. I'm okay with that. I'm not demanding, which is okay, right? And this will be unlocked 100% at the TGE, so there's no locking. Very nice, SynFutures, I like that. But then 20.5% is for the ecosystem. Now, is that really for the community? You know what I mean? You can argue that it is. I would say that it's not really for the community. Okay, but check this out. So part of it would be used for incentive programs to onboard new users. So for the campaigns, which is for the community. All right, I agree. Collaboration with strong partners. Now, is that for the community? Maybe they do some sort of giveaway. I don't know. Grants and funding for third-party developers building on the protocol. Now, I thought, for the community here means for the users, not for the developers. If you want to allocate funds for the developers, you have the, foundation treasury for that, right? And you have the protocol. Why don't you just put more in the protocol development? It makes sense to put in the protocol development. I don't know. And then the community incentives, hackathons, and other engagement programs, which is good. Okay. And then the liquidity campaigns, 0.5%, which helps accelerate F token listing and trading activities on multiple initial and follow-on exchange venues. So basically, 50 million token is spent for listing on exchanges. Okay, on ByBit, they already take 20 million, and I think this 20 million is within the 50 million. Basically, is for exchange listing, right? Which is for the community, for the launch pool. But what about the remaining 30 million tokens? Like, what are you gonna spend it on? Which exchange? You know what I mean? And then the backers and advisors get 23.5%. Quite a lot. again, I cannot argue. The allocation has a half-year cliff, unlike other, projects where they lock it for like a year. SynFutures only lock for like 6 months, all right, for the backers. The foundation treasury, 25%, which will be used to support the long-term stability and development of SynFutures. The foundation will leverage its treasury allocation to ensure long-term benefits for users and communities, with the allocation channels including but not limited to deploying tokens for strategic partnerships and business development. That's kind of repetitive to this one, no? Covering operational expenses and new initiatives. Okay, so what is the protocol development for? It's kind of repetitive a little bit. And ensuring long-term sustainable development across cycles. Okay, to ensure fair use, only 2% of the total treasury allocation, for example, 50 million tokens, will be unlocked at TGE. The remainder will be unlocked linearly over the next 4 years. Good. And then we have the core contributors, right? 50%. Basically, for the team and contributors, most likely the team. This allocation is subject to a half-year lockup, also lockup for 6 months, and then unlock over 3.5 years. Protocol development, 5% for salaries to the people or the employees, funding, audit, security, AMAs, technologies, marketing, I think, integration with complementary projects and platforms. Okay. All right. Only 0.5% will be unlocked at TGE. The remainder will be unlocked over the next 4 years. Liquidity is 3% unlocked entirely at TGE. So honestly, out of to me, right? Out of all of these, like 100%, I would say like, yeah, the team has like the majority of the token as all projects. The community probably has 7.5% from the airdrop, and probably about 20%, about 28.5% for the community, and the remaining is the team and the project, which is fine, right? Which is fine. In term, they don't mention how much token will be out initially at TGE, but looking at this like F token release schedule, there's probably like 13%, right? This will be 10, 15, and yeah, this should be like 13% of F token being released at TGE in initial circulating supply, which is not bad. 13% is alright. With that said, right, with the tokenomics like that, what is the valuation of F token? Now, if you look at the top perpetuals coined by market cap on CoinGecko, DYDX is like 700 million, Wu Finance 500 million, AVO 400 million, GMX 287 million, and APEX 87 million, right? I would personally think that SynFutures would be sitting at about 200 to 250, right? So $2 to $250 million market cap, just below GMX. All right, that's what I think, just below GMX. So that would make the price of F around 0.15 to about $0.2, around that, which turn the FDV, the valuation, the fully diluted valuation of SynFutures, to be at 1.5 to $2 billion. So if you think that it's actually worth it to participate in ByBit Launchpool, then you can go ahead and use the link in the description, register an account on ByBit, and just basically participate, right? It's similar to a Binance Launchpool where you need like MNT or USDT. MNT is Mantle, by the way, so you can stake either Mantle or USDT in the pool and you get the money. All right, you have like a few days to stake, so it's very nice. They also show you like the APR that you can get. So for now, 800%. But as the pool opens and as there are more people stake, this APR would come down to about like 100%. That's my experience with ByBit Launchpool, and I've participated in like 3 or 4 Launchpools so far. I always participated in the Mantle Launchpool. The last time I participated in Morpho, with the APR of about 128%, I put in 5,000 Mantle because that's the maximum amount of Mantle that you can stake in the launch pool. I made about $50 around that after 7 days, which $4,500. Then that's it. If you want to participate in Mantle or USDT pool, go ahead and do it. but that's what you can expect. Okay, and that's it for my video about SynFutures, what it is, you know, how it works, and what is my price prediction for SynFutures. I hope that you like this video, and if you agree with me when it comes to the price prediction of F token, give me a like, and share the video as well to your friends. If you don't agree with my price prediction, go ahead and comment down below what you think the price of F token would be after being listed on ByBit. Remember to use our referral code on ByBit, right, to get a 20% off of the trading fees and up to $30,000 in rewards. Okay, thank you very much for watching, and I'll see you on another video. Okay, take care. Bye bye.